coming up today on this special edition of the Prosperity Nation podcast.
The more we know exactly what's going on and how your money flows, the better we can advise you proactively. We can't really advise after the fact. That doesn't help. The more understanding we have, then the better and more proactive advice we can give, and the more accurate it's going to be. Welcome to the Prosperity Nation podcast. I'm Angie.
And I'm Elise.
And we are excited to talk to you about one of our favorite topics. I don't know if that's really true. But tax planning.
Woo! Yay, taxes.
Yay. I don't like taxes at all, and I don't like the tax code. Hey, by the way, did you know the tax code only has one thing in it?
I mean, I didn't until recently, so does that count?
Yeah. The tax code says one thing. It says everything is taxable. Everything is taxable.
And then there's a million exceptions.
That's right. There's volumes and volumes of code and regulation and court cases and all that says why it's not taxable. It's so basic. So if you have any questions if it's taxable or not, yes, it is. Unless you can find one of the millions of exceptions to that.
Oh my gosh, it's so confusing.
Oh my gosh, you're right.
Confusing maybe confusing is not quite the right word, but it's just so much. It's so much.
It is so much. And it's really hard to understand because you're trying to read a tax code and it says, well, this applies to you except for when here, but that's according to that code section. So, and then you got to go over to that one. It says, well, this applies except if it doesn't because of this, and you got to go somewhere else. And next thing you know, you're like 3 branches down, 4 branches down into these other code sections just to find out if this first one actually even applied to you or not.
I know. I like to call it the choose your own adventure. Because it's like you know what I'm talking about, right? It's like you read this and it's like, if yes, go this way, if no, go this way, and then you're like, okay, yes, so you go this way, and it's like, if it's under 5,000 here, and so you're basically choosing your own adventure, but using real life stuff.
You want to hear a story about that? So, okay, I started working in my beginning years of being a CPA when I was in my early 30s. So I didn't take the regular route where someone goes to high school and then goes to college. You guys heard my background a little bit. I had my kids when I was a teenager. I wasn't on the greatest path in my 20s, and raising kids and trying to get myself on track. So by the time I hit 29, I got clean and I went back to school. And so I was getting my bachelor's degree, when I was 30. And so I started in the CPA firm in my early 30s in a pretty big firm. And I was not used to corporate environment. No, I was like kegger on the river, motorcycles, tattoos, all of that. And then here I am like Dockers and BMWs and elevators.
Dockers? Do people wear those?
Thanks. No. Well, I don't know. I haven't been in that environment. Maybe they do. Come on. We're not normal CPAs here, remember? I mean, I don't have my blue shirt on,
I'm representing the West Coast.
Woo, West Coast.
Best Coast. Anyway, go on with your Dockers.
Oh, God, I forgot. Yeah, the Dockers. Anyway, so I'm in the CPA firm. And I am sitting in this little tiny cubicle and working my 12 hours every day in tax season. And I am just going nuts with all this. And I am like, oh my God, I am not a CPA. Like, I'm not a freaking accountant. What am I doing? I'm an artist, and I am an artist. And I had some art in an art show at the time, and it was fun. But I decided one day I'm going to bring in all my art and put it all around my little cubicle, So I'm like, I'm an artist, not a CPA. And it took me a few days and I looked around and I'm like, okay, this is dumb. I got to take all this down. This is not what you do in like corporate America,
That's so funny.
Everybody was really kind to me, but it was not the right thing to do. So I took it all down, but I decided at that time, I decided that I was going to apply my art to my spreadsheets and to my tools that I use in accounting and tax and all that. And I'm so glad I did, because even to this day, I diagram things really well. I help people understand really hard concepts through diagramming, through organizing, through really nice spreadsheets, and make things really easy for non-number cruncher people to get it. And that's what I used to do when I was studying the tax code. I couldn't figure it out for the life of me. So I would do diagrams. I would do these complex if-then kind of diagrams. I tell you, those things would take tens and tens of hours to do, but it also forced me to understand those ifs and thens and exceptions and what code sections apply and what doesn't. And that was a lot of work, but it was the only way I could really learn some of the sections of the code, because it's too much. It's too big.
It's totally true. But, why are we talking about this?
I don't know. I was just going to say, we don't need that anymore anyway. We can chat GPT and have them do a diagram for us. It's like, takes all the pain out of the taxes. Chat GPT, woo!
Yes. Taking everyone's jobs.
Yeah, exactly, including ours. Hey, our topic was tax planning here, but you can go use Chat GPT, and I actually did this. Okay, I'm not going to, don't tell anybody,
share our
Elise.
secrets.
I know, but I did this to test it out when I first found out about ChatGPT. I'm like, if I am a 50-year-old business owner with 2 rental properties and making, $200,000 a year, and I'm married and yada, yada, what tax planning advice will you give me? And ChatGPT, right, spits it out in 3 seconds. And I'm like, holy smokes, this is pretty good. And I actually had that moment of worry, like, oh my God, my job's going to go away, But anyway, our job doesn't go away because people want people. They don't want to read tax stuff. They want to talk to a person.
They don't want to read tax stuff. And then also, they don't even know half the time what the numbers to even use would be. So it's like, with ChatGPT, of course, if you knew what your capital gains were going to be, you could easily type those. People could do it themselves, is what I'm trying to say. But people don't know enough to know how to do it themselves. True. So they still need, and ChatGPT is only going to use the data you give it.
Right.
So if you're giving it wrong data, it's going to be wrong.
Exactly.
So
exactly.
Yeah.
Yeah, exactly. And of course, I tested it with some more complexity in there, and it couldn't figure it out.
Yeah, right.
And so I was like, okay, have a job for a few more years. This is good.
Until they figure it out.
Right.
No.
But here's the point: is that we know that people like to talk to a person, and we know there's a shortage of CPAs, and everybody always comes to us complaining, I can't reach my CPA, and we're like, we get it. We go on vacation during the summer. We're buried in tax season, and then we don't want to talk to people. We want to have some time off. I say we as a collective, but the truth is there's just not enough qualified CPAs to help the people who need help. It's just how our industry is right now. But what we want to make sure that people have is no surprises with their taxes, because there's no reason for surprises. It's just math, and when you have clean, orderly books and you have good ways to project your income, project your expenses, your taxes can be known early on, mid-year. So that's what we do. We do mid-year tax planning, tax reviews, big clients, small clients, even just send a little report. And, I just wanted to talk today about a few of the common things that we look at in a mid-year. Year-end tax planning gets a lot more in-depth, but mid-year is a good time for a check-in. How is the things going? And I think our clients usually have that question on their mind of am I withholding enough? Have I paid enough in? What's this going to look like? And they start to feel that little bit of worry coming up, wouldn't you say?
Oh, yeah, I totally would. And I think they get a sense of relief kind of when we do get these mid-year projections, because we can really start to see are we on track, or do we actually need to make changes? And what's great is it's done in such a time where there is plenty of time to make changes that are maybe small and gradual, instead of it's December 20th, you need to pay 50 G's tomorrow, and so that way they can kind of plan 10,000 a month versus 50 at once or whatever. Yeah. So I think a lot of them that have been with us for a long time and are used to that now have really appreciate it.
Yeah. Well, what are some of the things that you look at this time of year, Elise? What questions are you answering? What do you help people with in the mid-year reviews more than anything?
I would say the first thing is payroll and withholding. So one is, are they even on payroll, and are they withholding enough or any money at all? So I think that's important. if they are, and if that's necessary in their overall strategy that we're doing with them, is to actually check and see if they are making the state or federal withholdings. Another thing is just kind of a check-in on the rough profit that we would estimate if they have like a flow-through entity.
Yeah.
What that would look like, obviously it's hard to predict when you're only 6 months in, but we generally are pretty good about it. We're pretty close, actually, when we go back and review our projections. We're not that far off, but so that's important too, just to kind of do a check-in, because that will also tell us if we need to make any adjustments. And then I think the other biggest thing really is if there's any major changes, like if we've had clients that have sold homes or anything that would affect any other like capital gains or other major taxes, that we would need to kind of know what they sold a business, things like that.
Yeah, exactly. And, we've seen when clients come in, when they have flow through entities, most people are S corps when they come in, or they should be, one of the two. But the problem that they don't know, they come with bad advice. They come with things people have told them to do, or, preparers that didn't really understand told them, or they looked it up, or they chat GPT'd it. I don't know. But they come in and, they're used to just taking money out of the company. It's mixed up. It's blended with personal and business. And they just take money when they need it, basically. But what most people don't realize, and what we have to help them get real quickly in understanding, is that you can't take out more distributions than you're profitable as an S corp, because then this could cause you tax problems. And so, but they don't know, because they just think they don't want to pay the payroll taxes, so they're going to take distributions instead. And there is a fine balance between, well, how much payroll do you have to take? Should you take? How much should you withhold or don't, or pay your estimates? All of those questions are important factors in it. And it's funny, some of the things that we hear are like, well, how much payroll do I have to take to make it okay? Or to hit the, to be under the rules. And it's like, where did you even hear that? There isn't even a thing.
I love when they come with like percentages or like dollar amounts. They're like, okay, so I can take up to 60%, or it's just the weirdest thing. Like 60% of my total revenues. I'm like, you can if you want, I guess. I don't know. Sure. Okay.
Well, I love the way you always go back with it. Elise, you're always like, well, were you on payroll? Was it a business expense? Like, don't put that on me. Like, did you work or didn't you? It's like, stop trying to fit yourself into the tax code. Like, are you doing it or are you not doing it?
I know. It's like, run your business. Who cares what the tax law says? I mean, not who cares, but like, do your business, your business is run.
Yeah. And there's two different points of view on what tax planning is. Often people think tax planning is tell me the amount of payment I need to make in this quarter, that it's really payment planning, right? It's like, based on last year, here's what you go, okay, run the numbers, and here you go. You pay it in or you don't pay it in. But to me, tax planning is the what if scenarios to change things to see how it reduces your taxes. And that's very different. And I would get frustrated. I used to get frustrated with that. Does your CPA have a tax plan? Yeah, he told me to pay the quarterly estimate. I'm like, okay. Well, we would run the scenarios and say, okay, well, option A, option B, option C, right? And but I think one of the important things that we've learned more recently too is getting very, very clear on what the client's goals are. Because sometimes a client comes in and maybe it's under a tax deadline or a year-end planning deadline or something, and they're like, save taxes. I want to save taxes. Right?
Mostly all of them say that.
They do. And then we're like, well, we have some strategies and some ideas, but we try to check in with them. Say, okay, but this is going to cause this and this is going to cause that. Yep, got to save those taxes. Okay, do it. And then 6 months later, when they're trying to get payroll set up or adjust their, retirement plan, or they got 4 entities they've got to deal with, all of a sudden they're realizing the effect of that. And now we have to go back and adjust, like, wait, what are you really trying to accomplish here? Are you trying to just save taxes? Are you trying to simplify your life? Trying to make more money? Are you trying to have more time? Because sometimes those things can conflict. We put in one tax strategy and then the complexity goes up and now you have to pay more in advisory fees. But if that gives you peace of mind, great. But if you don't care about peace of mind, you just cared about saving money and now you don't want to pay advisory fees, you don't want to pay taxes and all that, what is your goal? We don't know. We have to adjust that.
Yeah. And even like, let's say a client wants to buy a home in the next year or two, like that might be a totally different strategy we'd recommend for whatever they need to show on their tax returns or something, to qualify a loan, whatever it might be. But yeah, I think that you hit it on the head. Like it's really important to know the objective and their goals really to be able to actually do an effective tax strategy. Yeah. That's actually like, not just like, let's put out the fire, and the immediate need, but will be more of a long-term thing.
Exactly. And because it's not taxes first and then your personal life. It's like design the personal life you want and then reorganize everything so that you get the funding that works for you to have that life and pay the least amount of taxes possible along the way. And that's the it's just a confusion because people are like, I want to deduct it. I got to run everything through my business. You talk about this. I got to run everything through my business to get a tax deduction. But it's like, why? Why are you even thinking that way? Right. Like, I know none of us want to pay taxes. I get that. but isn't the point to like live a great life and then, by the way, structure it the best way possible to pay the least amount of taxes?
That's what you would think. And I mean, that's what we generally do with all of our clients. Yeah. So I think the bottom line is like, and this is what I love, you always preach like nonstop, is no surprises, And I think that at least with, our clients that are even newer, it's a little hard to control, especially if they come right at the end of the year. There's only so much we can do other than just kind of show them the numbers. And we have a few things we might be able to do, but the people who've been with us for a long time, I think like we've really got it so dialed in to where they're basically break even or,
Well, their questions start changing when we settle them down. Now their question is, well, how else can I make money? Where else am I not being efficient? How can I reach these bigger goals? Like their attention isn't even on goal achievement when they first come in. There's just so much stress and chaos. And then we just get our hands in there, straighten it all out, see what's going on. And then we can look at what's happening with the taxes and go back and clean things up and project what's coming. It kind of takes a while, a year or 2 years just to smooth everything out so that now we actually can help them really direct money into goals. It takes some time to even figure out where you are when you're coming in with a lot of chaos.
Yeah, I think that's a problem. It's like, it's kind of, taxes are just annoying. And I think if we can take the attention off and the focus off of just like saving taxes and more on, like you were saying, the goals and making more money and all that. Yeah. And we're like, we're going to keep an eye on your tax situation so you don't have to.
Yeah, exactly.
We're going to handle this. If we see there's a problem, if we see, things have massively changed and you're going to potentially owe a lot of money, we're going to give you solutions early enough to where we can try to rectify it before the year ends. So, and I think it's a relief for a lot of our clients.
I think so. And that's why we designed our boutique firm the way that we have, that we do this personal CFO services, because we actually don't want to work with just tax clients when we are not in control of the accounting side of it, because the stress on us of trying to figure out what's going on and give you actual advice when it's over. We can't give advice over chaos. We can't give advice over mistakes. We can't give advice over unknowns. The more we know exactly what's going on and how your money flows from the business to personal and to your investments and to your retirement strategies, the better we can advise you proactively. We can't really advise after the fact. That doesn't help. So the more controls, the more clean your finances are, the more understanding we have, then the better and more proactive advice we can give and the more accurate it's going to be. These are the things that we want you to look at, things that we recommend you look at, things that we look at is checking in. What are your taxes going to look like, if you keep going at this pace? And do you have enough held in? Should you take more distributions? Should you take more payroll? Should you withhold more? Should you put more in your retirement account now? Should you put more away in your investments? Should you buy that house? All of those things. And they all come on top of really, really clean numbers. So get your numbers clean. Keep your books up to date all the time. Don't think of your accounting or your bookkeeping as just something you do for tax returns. You missed the point. And you're surprised.
That's a whole nother episode.
I know. That's true.
But yeah, exactly.
That's true. That's true. So that's our motto is, no surprises when it comes to taxes. And, even on our favorite clients who say, I know you've been telling me this, but it still sucks to make the payments. I'm like, I know it does, but it really sucks worse when it's April 15th and it's 10 o'clock at night and you're in the airport trying to make a tax payment from your cell phone and transferring money from 3 accounts, right? That sucks worse. We know that. So that's why we don't want that.
Exactly.
So that's, so let us know, what do you think about it mid-year? What do you do? What do you not do? I hope this helps. Just take a few minutes and look at these things now and do some simple math. Do it at mid-year, because if nothing else, you can just times it by 2 and see if it's where see if it works. And get yourself on that path. We want to hear from you, though.
Exactly. So go ahead and share your stories with us at stories@prosperitynation.com. Go ahead and like and subscribe to our podcast and follow us on social media.
Awesome. See you next time.
See ya.
Thanks for joining us today. Follow us on social media for the latest episodes, updates, and more. Like and subscribe to videos from us on YouTube and find out more at prosperitynation.com. That's it for now. We'll see you next time on the Prosperity Nation podcast.